Welcome back to the Real Estate 401k Show. I'm your host, Mike Weinstein, and this is Ryan Gerdes to my right, to your left. I don't know how it looks on the screen, but you're still to my right now.
Well,
It is what it is.
I think that I don't know. I watch our stuff. They sometimes zoom in pretty close on us. I mean, mostly me because I'm so devilishly handsome.
Do they zoom in on you, or do you just fill up the screen more?
Oh, you got jokes. I didn't know. It was like night at the improv. Shut up.
and we're missing Justin, of course. A lot of our listeners don't realize because we're like a year and a half into this podcast.
Mm-hmm.
So I want to set the stage. For us, we spent many years doing this type of show on terrestrial radio, on an FM station out here in Phoenix, and really have had a lot of experience, got to know a lot of our listeners, our local listeners. But the problem for us was it was just here in the Phoenix area because, radio waves only travel so far. So we made a decision to leave radio, get into the podcast world because we wanted to expand our message of real estate wealth management to the masses, and we recognized people from all around the country wanted to invest here in real estate. And I just want to take a moment, Ryan, and thank our followers and thank our listeners. We have some of the most incredible conversations with those people that text the word invest to 623 AZ Recon. We've met so many new friends. We've helped so many of our podcast listeners actually buy and invest in real estate. So it's been great. But I didn't know what to expect. Like, I'd never done a podcast. I didn't know what was going to happen.
Social media is just not like. I mean, it's not that I don't like it. It's just it's not something I'm into. You know what I mean? And so like I when we were doing all this, because radio, we never. What did it play on? I think it played on Spotify or maybe Apple, but mostly it was just over the radio waves.
Now, I don't know when we were in the iHeart network, I think it did. But when we were at 92.3 KTAR, I think it was just. I don't know. That's a great question. I don't know.
Yeah,
it doesn't matter.
Yeah, it doesn't matter.
Here we are. We are gracing the podcast sphere with us.
Yeah, and it seems like a lot of you guys are really following us on TikTok, and that's hilarious because I had no idea what TikTok was about, up until maybe like a couple years ago, and then of course my kids fill me in, and I'm like a dinosaur to them, I don't know anything, and I'm just an old dude, but. Then I jump onto TikTok, and it's like, oh, you have several thousand, views on this, and then I think we had like 1 million, and hundreds of comments, thousands of comments, and it's like, okay, people are engaging. I mean,
hold on.
Aside from
hold on. You talk about being the dinosaur and not being on it and as familiar. I had to set it up. Do you know what it was like for me to set up TikTok and Instagram?
Come on. Thomas was the one who. I mean, I know you. Yeah.
that was a shit show.
Dude,
I'm not gonna lie.
I know. Just watching you do it, that was painful. Just like, all right, dude, it's all you, man. Get on it.
Why do we have 82 usernames and 542 passwords?
Right.
I don't know,
dude. I don't know either. But good on you, Thomas. Thomas is our producer. He helps us out with a lot of our social medias, getting everything uploaded, making sure that the content is visible, making sure that what you're seeing is good quality, that you're getting the captions. And so, I mean, I was just going through some of these comments, a couple of days ago, and I was, talking with Mike, and I was like, you know what, we ought to give some shout outs to some people here and kind of just talk a little bit about what some of these people are responding to.
I think we should start doing this every week.
I'm not afraid, man. Most recently, Justin came on, and what I'm seeing here that is just getting a ton of activity. He was just kind of talking about how to manage your finances, debt to income ratios, what's good debt, what's bad debt, vehicles, etc. And 100 of you guys reached out, and this isn't said enough. Also, if you buy a vehicle in your business name and pay it through your personal account, it now becomes personal debt. Andy, thanks for chiming in on that, because that's a good point that that could be added to it. 100% accurate. We pay any car we have through the business account, and then we applied for a mortgage, and it was excluded. So, it's just some really good tips and tricks that people have added in here to help with debt to income ratio and understanding what good debt and bad debt is. And that was Tony G410. So thanks for chiming in, Tony. Let's see. Martin Moss, this will only work if you also show the vehicle liability being written off as a business expense on tax returns. Martin Moses said that. I think that there's a lot of really good gems here, and I think that's what's hitting home is a lot of the people that are savvy with these types of concepts that we're bringing in are really utilizing their network and their tax professionals, which is the same that we do. And everyone's situation is different, but thanks for chiming in there, Martin.
Yeah, and I think we also just want to clarify, we are not accountants, and anyone that's chiming in may not be an accountant. So,
that's your little caveat.
no,
'Cause
I'm
you're
just
scared.
saying. No, I'm just saying, take it for whatever it's worth. Always confer.
Sure.
Always confer. But yeah, so we did. We talked about the benefits of back on June 24th. Benefits of should you rent or buy in this market, and boy, now if I could find oh man, this is.
I did a short talking about
Keep going.
about it being cheaper to rent than it is to own right now. Lucid Dream said there are no deals right now, and I would say Lucid, they're just not where you've normally been looking. There's a lot of deals out there, but they are more infrequent. But the good news is we've been seeing a lot of investors folding up their tents because they were getting they were getting money so easy.
So, go ahead. So I found mine, and I'm on the big IG right now, and we were just talking about the benefits of renting versus buying, and I love this comment by Tim Walsh _23. Unfortunately, it's not as easy as deciding whether to buy or rent. If you're in a position to buy, then yes, it's better. But getting to that position can be a very large hurdle for many. Couldn't agree. But if you're in that position, just waiting for it to magically happen doesn't happen. That's where, like, when we ask people to text the word invest to 623AZ Recon, you don't necessarily have to be in a position to go right now. We will help you with those strategies. We'll meet you where you're at, because when I first wanted to go out and buy a home, I wasn't in a position, but I had someone work with me and help me understand what I needed to do.
Right, and the thing that I love about people like in the conceptual stage of reaching out, to invest, is you don't learn any bad habits from people who are failing at it, quite frankly. And you know what? There's a ton of different ways to be successful in investing in real estate. You need to figure out what works best for you. And so if we can do it at the conceptual stages, then we can talk about who you are, what you're trying to accomplish, and customize an investment model specifically for you. Because you might listen to us and you say, you guys are full of shit. I don't like the way that you guys have your model built out. That's fine.
I sometimes look at us and say we're full of shit.
Yeah, like that's perfectly fine. That doesn't mean that we're not familiar with all the investment models out there. We've just created ones that work best for us.
That's a good point.
So you were also talking about here if you've different opportunities for tax write-offs and all the pillars that we make money through real estate. Between appreciation, mortgage payoff from tenants, tax advantages, etc. And so we've had quite a few people chime in on that. Andrew Fury says, you only make money on a personal residence if you sell. If you don't, there's no depreciation, or rental income, so you just bought yourself a very expensive rental. So, Andrew, I would ask you this. Can we all agree that Warren Buffett is a billionaire?
Yes.
Okay. Can we all agree that Bill Gates is a billionaire?
Yes.
Okay. Andrew, let me ask you this. They've made their fortune primarily through different business ownership and stocks, etc. Do you think that they have billions of dollars sitting in their bank account? If you say yes, you're wrong. There's no way that they're going to keep billions of dollars liquid in their bank accounts. And I don't even need to fact check that, because they know that money that's not working for them is just going to lose money through inflation, etc. So while I do agree that there is a gray area for primary residences and that you can only call it appreciation once you sell it, that is not true. It's just like having equity into a stock, right? Now, I definitely would agree with you if you were to say, well, stocks are more liquid than real estate, and that would be true. But the moral of the story is if I have $1 million just sitting around in my savings account, I'm going to do everything I can to have it invested either in, for me, real estate or some type of stock, commodity, some type of investment vehicle that is going to make money for me. So I see this argument all the time, but to say that Warren Buffett isn't a billionaire because he doesn't have $1 billion sitting in his savings account would be a ludicrous statement.
Yeah, and it's also, we talk about all the time, appreciation is not the only way that you make money on real estate. And that really is the danger for many buyers and investors thinking, if this house doesn't go up in value, then I haven't made any money. I mean, you got the you got the tax write-offs, potential, positive cash flow. The point that you put a renter in there, they're buying down your principal. It's just you just can't go with blanket statements. You got to understand truly not only how real estate works, but how money works.
Nonetheless, thanks for reaching out, Andrew. Appreciate
Yes,
you.
absolutely.
Appreciate you engaging. Renting versus owning is simply low risk, low reward versus high risk, high reward. Thank you very much. That definitely proves our point. And that was Ryan. What a great name. No last name. But I'm sure you're a dashing, good-looking fella. Renting you can always get out of, and buying you can't. These people who got into real estate after COVID don't know shit. You take full responsibility for repairs when buying too. It says Jonah Borup. Okay. Gosh, that's just it's almost just laughable. It's spoken like a true renter, I suppose. But thanks for reaching out. But at the end of the day, if you're renting, you are definitely investing in real estate. You're just investing in somebody else's real estate. So, good try, Jonah. I hope that thought process works out for you whenever it comes to your investment model and being able to retire someday. Right. Lizzie Joe 54. The rent in this area can be up to double the mortgage payments as most of us make, so it doesn't apply to us here. It would if I were buying a house right now. Okay, so I don't know where you live, Lizzie Joe 54, but I do understand that that's still something that occurs in some areas. So I get it, and that's certainly been the case here for many, many years. It was a hell of a lot cheaper to own than it was to rent, and right now we're just in a little bit of an upside down market whenever it comes to that. And so we always talk about who's going to blink first, right? The tenant or the landlord. Well, generally speaking, the landlord is going to be a little bit more stubborn in the long run than the tenant is. So something's going to have to happen. Either interest rates are going to have to adjust, home values are going to have to adjust, or rent is going to have to adjust. And I see rents going up. That's just all that I see happening in the long run.
All right. So for the sake of time, I do want to encourage our listeners, if you're wanting to learn more about investment strategies or real estate acquisition strategies, or just want to know where to, well, you found us right now. So I guess you know where to find the podcast.
Yeah, and we'll tag you on this episode, everyone that we've talked about.
But go ahead and text the word invest to 623-AZ-RECON. That's invest to 623-AZ-RECON. So I want to just go back to how we started. So radio was different because we pre-recorded, but we could have been live. You just didn't know if anyone was listening, if 1 million people were listening. We went on, we recorded, and we were just on the radio. Podcast kind of gives us, being on Spotify and Apple Podcasts and YouTube and Facebook and all of them, really kind of gives us a sense of feedback and understanding what people are thinking. And going back to, I didn't know what to expect because I never did a podcast, but can we just give a shout out to all the trollers out there? I love going through this stuff because sometimes I just flippin', well, that's a
Flippin',
new one.
flappin'.
Flippin' love stupidity and ignorance.
I just like I like it when they talk shit about you. I'm sure you like it when they talk shit about me.
Well, especially Justin.
Oh yeah. That's he's a easy mark. But the funny thing is that there's a hell of a lot more supporters than there are trollers out there.
Yeah.
And so we appreciate your support, both of you. We appreciate your support because there's no such thing as bad press, and I like, all kidding aside, I do like being challenged. I do like learning, and if all I'm being told is yes, and people stroking me all the time, then it's hard to grow. So I do like constructive criticism. I do like it when people give me an intelligent response that says, Ryan, you need to rethink something. And so all these engagements and all these people that have reached out, I want to thank you from the bottom of my heart. Really appreciate that. And if there is some constructive criticism, then I wholeheartedly embrace it and would love.
But let's chat about it.
Yeah. Oh, I don't care. You can blow me up on the interwebs. I don't
I'm
give a
just
shit.
saying, and that's where I was leading. I can't help but think that there's a lot of people that have commented on a lot of our posts, listen to the podcast, have opinions, strong opinions, whether they agree with us, differ from us, but they've been hesitant about making that decision to text into the show and say, hey, let's just have a conversation. Let's talk. Because at the end of the day, it's not a matter of who's right or wrong or whatever. Our job is to help our listeners build wealth through real estate. And we can't do that until you raise your hand, and you do so by texting the word invest to 623-AZ-RECON. That's invest to 623-AZ-RECON. We welcome the conversations.
Hell yeah.
And we don't for a minute think we know everything. And I don't know how many times we learn from our investors, and that's what makes us who we are, and we would welcome that conversation. So once again, to reach out to us, text the word invest to 623-AZ-RECON.